Undoubtedly, the last couple of months have been challenging in the cryptocurrency market as many cryptos, including Bitcoin, lost substantial chunks of their dollar value. While Bitcoin is down 50% since its November all-time high, many altcoins are crashing harder. These price drops became even more pronounced after Russia launched a full-scale invasion of Ukraine. And let me tell you, this latest crypto price crash means an eye-watering $500 billion has now been wiped from the combined crypto market in just 1 week, reducing it to levels not seen since last summer. Hello and welcome to Money Talks. In today's video, we will be discussing Bitcoin's recent price fall as Russia-Ukraine war triggers panic in the cryptocurrency market. Make sure to stick around till the end of this video to know everything Bitcoin's key technical levels during this war, Russia's confused crypto policy, and whether the Russia-Ukraine conflict could cause another massive crash. Also, if you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Now let's dive right into the video. Bitcoin is taking huge geopolitical hits on its face in 2022. Although this has never happened, investors are not surprised about the Bitcoin and other digital tokens price fall. For 3 months straight, Bitcoin has been encountering constant hits. When things looked prosperous in February 2022, Bitcoin's price again tumbled over the Russian-Ukraine conflict. Ever since Vladimir Putin pushed Russia's military force into Ukraine, the global economy has been threatened, including the cryptocurrency market. Every financial ecosystem is facing back-to-back hits from this geopolitical tension. Bitcoin's price has plunged to as low as $32,000 last month, pushing other altcoin prices to massive falls and questioning the existence of the cryptocurrency market. Bitcoin is now roughly 50% down from its all-time high in November, but the price plummet has literally questioned the whole existence of the cryptocurrency market. Digital tokens are decentralized and work independently. Its sole existence is not to be shaken by the changing circumstance, but for the first time, Bitcoin's price is suggesting otherwise. After threatening to start a crypto winter, many experts say that Bitcoin could plunge to as low as $28,000. But why? At first glance, it might seem that the situation with Russia in Ukraine has nothing to do whatsoever with cryptocurrencies. After all, most digital tokens wouldn't experience any direct problems if the conflict worsens. However, when the overall environment appears to become overly risky, many investors prefer to move their money into assets that offer more stability and safety. This is sometimes referred to as the RiskOff Trade. A risk-off scenario began to unfold in late 2021. Even before the escalation of tension between Russia and Ukraine. It's why both growth stocks and cryptocurrencies fell significantly in recent months. The potential aftermath of economic sanctions and increased global tension won't help matters either. Although not every cryptocurrency will cause the same level of pain for investors in a full-blown risk-off market. For example, the most well-known and most widely used cryptocurrencies probably wouldn't decline nearly as much as others. Despite the recent crashes, Bitcoin and Ether would likely hold up better than many other digital tokens. They're the two largest cryptocurrencies based on market cap. With Ethereum's blockchain used widely to support smart contracts, its real-world utility could provide a cushion to some extent. Meanwhile, Russia's confused crypto policy also added to the slump. The country's finance ministry said on 21st of February that it would take proposals on cryptocurrencies from the country's central bank into account so long as they don't contradict its own approach, paving the way for legislation covering digital assets. A simmering dispute over cryptocurrency regulation in Russia heated as the finance ministry submitted legislative proposals to the government that clashed with the central bank's demand for a blanket ban. The Bank of Russia has proposed banning cryptocurrency trading and mining due to the threat digital currencies pose to financial stability. But the finance ministry prefers legislation that regulates cryptocurrencies, allowing them as an investment tool, but not as a means of payment. The finance ministry's draft legislation aims to create a legal market for digital currencies. One proposal is for transactions involving the purchase or sale of cryptocurrency requiring customer identification, a move that may diminish one of cryptocurrency's major selling points, their anonymity. Other proposals include foreign cryptocurrency exchanges having to obtain a license in Russia and introducing financial literacy tests that determine how much individuals are permitted to invest. Citizens who successfully passed the tests would be permitted to invest up to 600,000 rubles, or $7,853, in digital currencies each year, the finance ministry said. Those who fail would have an investment limit set of 50,000 rubles annually. Coming back to the current problem, tensions are high as Russia continues to invade Ukraine. In Ukraine, a non-governmental organization called Come Back Alive has raised $400,000 in cryptocurrency since the war began to buy medical and military supplies for the army. Crowdfunding for global causes is not new, but crypto makes it easier to transfer the funds, which are not subject to the same hurdles as traditional bank transfers. Russia, meanwhile, has established itself as a hub for illicit crypto activity, including ransomware attacks and cryptocurrency-based money laundering. Crypto businesses operating in Moscow City, the financial district of the Russian capital, pocketed $700 million worth of digital assets from entities linked to criminal activity over the last 3 years. That suggests a possible avenue for enterprises seeking to avoid sanctions. The next question from Bitcoin and cryptocurrency holders is, are we hitting rock bottom? Probably not. Despite the ongoing crisis, experts say that there is very little chance that Bitcoin's price might crash completely. Although the Russian-Ukraine conflict on the cryptocurrency market is unexpected, it shows no sign of wiping out the decentralized ecosystem. But this is not the only reason digital tokens are facing a plunge in recent times. Since the Federal Reserve's tightening policy news came out, Bitcoin was facing uncertainty. With the possible interest rate rise, the situation got even worse. But this doesn't mean Bitcoin is going to zero. Even when the global scenario is worsening and taking a toll on the cryptocurrency market, the underlying technology is being cherished. However, it is creating a disconnect that nobody expected. From the very beginning, the success of Bitcoin paved the path for blockchain to grow. Today, the technology has reached an extent where advanced features like dApps, smart contracts, NFTs, etc. are taking distinct shapes. Therefore, the growth of cryptocurrency is divided across many applications. So what are Bitcoin's key technical levels to look out for? After encountering massive cryptocurrency blows, analysts are coming up with technical analysis to figure out where Bitcoin will find a support level. Currently, Bitcoin is on the liquidity level between $37,000 and $38,000, indicating that people are still interested in it. However, it is struggling to get a stable ground at $40,000, which is very crucial. According to some experts, there are two major test levels, namely $33,000 and $28,000. If Bitcoin's price falls below the $28,000 mark, it might clearly indicate a crypto winter ahead. However, the last time we encountered a crypto winter, the situation was even worse. Within 5 months, Bitcoin's value plummeted by more than 80%, but enthusiasts say that such a situation is very unlikely. So, how should investors take this? Bitcoin investors should first embrace the fact that digital tokens are extremely volatile, and they might serve anything on your plate. Although government policy changes aside, investors can expect that the prices of Bitcoin and other digital assets will increasingly move in correlation with the prices of traditional assets. Although unfamiliar cryptocurrencies might not follow this, top digital tokens like Bitcoin and Ethereum have a high chance of opting for the correlation. But as told before, Bitcoin reaching zero or hitting rock bottom is impossible, at least for the time being. However, more regulations and geopolitical changes might have a massive impact on the whole cryptocurrency market from now on. And that brings us to the end of today's video. What are your thoughts about Bitcoin's plummeting prices? Will we witness another crypto crash amid Russia-Ukraine conflict? Tell us in the comments. Also, don't forget to like and subscribe. We'll see you soon with the next video. Thank you so much for watching.